Picture this, November 1923. You stand in a Berlin bakery. Behind the counter, the price board reads 200 billion marks for a single loaf of bread. Not 200, not 200,000, 200 billion. The woman ahead of you pulls out a wheelbarrow, not to carry groceries, but to carry enough cash for milk. By the time you reach the front, the baker crosses out the price and writes 250 billion. The mark lost 30% of its value in 12 minutes. This is no dystopian fiction. This is the Weimar Republic. And history repeats. Venezuela, 2018. A carton of eggs costs 7 million bolivares. Zimbabwe, 2008. A bus ticket requires a 100 trillion note. Lebanon, 2023. The currency loses 98% of its value in 4 years, turning doctors into paupers overnight. Here's what keeps a strategist awake at night. It is not if your currency will fail, but when. The average lifespan of a fiat currency is 27 years. The US dollar has existed since 1971. Do the math. So here is the question that truly matters. When the rules of money are rewritten overnight, what holds value? I studied a century of financial autopsies, from Weimar Germany to Venezuela, Lebanon to Zimbabwe, and extracted the forensic lessons. Not theory, not speculation. By the end of this analysis, you will know exactly which 5 assets survived when empires burned, and which evaporated faster than a currency in hyperinflation. The law of currency collapse. Currency collapse follows a mathematical, predictable pattern. Stage 1, the government spends more than it collects. Stage 2, money is printed to cover the gap. Stage 3, the currency begins losing purchasing power. Stage 4, citizens flee to alternatives. Stage 5, complete collapse. Every single time. Weimar Germany, from 320 marks per dollar in mid-19 to 4.2 trillion marks per dollar by November 1923. 88% loss in 18 months. Venezuela, from 10 bolivars per dollar over 1 million per dollar in a decade. Lebanon, from 1,500 per dollar, 89,000 per dollar in 4 years. Same stages, same outcome. 1. Precious metals, the universal hedge. What survived? Let's start with the obvious, and yet most people do not own it. Precious metals, gold, silver, the assets governments cannot print, central banks cannot debase. The brutal reality. Weimar Germany, paper marks, total wipeout. Gold maintained purchasing power. An ounce of gold bought the same basket before, during, and after hyperinflation. Currency changed, gold did not. Zimbabwe, when Mugabe printed the 100 trillion note, gold holders were protected. Venezuela, believers became worthless, gold retained value. Today we see this in Turkey. Late 2024, gold deposits in Turkish banks doubled from 1.36 trillion lira, 2.72 trillion lira in 1 quarter, doubling in 3 months. Why? Citizens recognize the pattern: runaway inflation, currency debasement. They flee to the one asset history proves survives every collapse. Gold does nothing. It requires no earnings, no dividends. Its sole function is not to be debased. When fiat supply explodes, each unit loses purchasing power. Gold supply cannot be expanded arbitrarily. Its value rises by historical proof. 2008 financial crisis. Gold fell initially, then rose 166% in less than 3 years. Silver outperformed, rising 448%. Each enjoybitis stagflation. Gold fell nearly 50% mid-decade, then surged 440% by 1979. Pattern recognition is undeniable. The principle is brutally simple. Precious metals are insurance, not speculation. They preserve purchasing power when everything else burns. 2. Foreign hard currencies, the escape valve. When your domestic currency dies, the escape is holding someone else's money. Consider Beirut, October 1919. A nurse saves $50,000 over a decade. The Lebanese pound is pegged at 507 per dollar for 22 years. Then the peg breaks. August 1919, 1,600. April 20, 2020, 3, 12, 20, XC 20, 3,000. April 2020, 3,000. March 2021, 14,000. By 2025, official rate 89,000 per dollar. Her pound-denominated savings shrank to $1,000, 98% loss in purchasing power. Her colleague holding physical US dollars preserved evaporates of her wealth, not magic, not luck. The dollar or other stable foreign currencies resist collapse while domestic currencies fail. History repeat. Zimbabwe, the economy dollarized before the government made it official. Ecuador, 2000, dollarization after crisis. El Salvador, 2001. Panama, dollarized since 1904. Venezuela, major purchases are in dollars. Argentina, property bought in dollars, not pesos. The lesson is clear. Access to foreign currency during a crisis is total protection. Holding the collapsing currency, destruction. Holding stable foreign currency, survival. This is the first part. It sets the stage for Machiavellian analysis, the pattern of collapse, the inevitability, and the first two survivors. 3. Productive equities, ownership in reality. Here is where most people's understanding falters. Imagine Venezuela 2024. The stock market surged over 3,400%. The Caracas Stock Exchange climbed from 2,082 points, over 6,000 in just 9 trading days of January 2026. Individual stocks went Mercantil Servicio Financiero 200%, CAN TV 219%, Banco Provincial 171%. You might think the economy is collapsing. How can stocks rise? It makes perfect sense once you understand what a stock truly is. A stock is ownership in real assets, factories, inventory, land, equipment. When the domestic currency collapses, the nominal price of these assets rises because inflation inflates the currency, not the assets themselves. A manufacturing company worth $500 million in productive capacity remains the same real value, but its stock price inflates in local currency terms. Critical distinction: not all stocks survive equally. Companies earning all revenue in the collapsing currency see real profitability vanish, even as the nominal stock price rises. Companies with 50% or more revenue in foreign currency thrive. Domestic costs fall in real terms while dollar income remains stable. Profitability improves. These equities become inflation hedges. Historical evidence: Latin American crises 1982, Mexico peso crisis 1994, Asia meltdown 1998. Direct investors with export-oriented businesses survived and thrived, while domestic-only companies burned. The key: export capability. Thus, productive equities with international revenue streams are not just survivors, they are beneficiaries of currency collapse. Domestic-only companies, they perish with the currency. 4. Consumables and barter goods, tactical liquidity. When the monetary system fails entirely, commerce does not stop. It transforms. Post-World War II Germany, the Reichsmark was worthless. People traded goods for cigarettes, coal, potatoes. Cigarettes became a temporary currency, standardized, divisible, non-perishable, widely accepted. Black markets ran around the clock, exchanging cigarettes for everything from tickets to services. The principle is simple: more units chasing the same goods, higher prices, even for barter items. Venezuela 2018, fishermen exchanged catch for flour to feed children. Anything with intrinsic value, medical supplies, food, water, fuel, batteries, basic tools, became currency. Even toilet paper and soap held value during supply chain disruptions. Limitation: consumables are consumed. They cannot store wealth long-term. They are tactical, not strategic. A prudent strategy allocates a small portion of wealth to consumables for immediate crisis utility, with the bulk held in assets that do not vanish when used. 5. Agricultural land, the immutable source of life. Agricultural land is immobile yet invaluable, producing the one thing humans cannot survive without: food. Great Depression. Farmers had stark advantages over urban dwellers. They raised gardens, canned fruit, milked cows, kept chickens. Clothing and consumer goods could be sacrificed, but they faced one harsh reality: taxes and bank debts still demanded cash. Venezuela, landowners could produce food regardless of currency collapse. Urban real estate owners faced tenants unable to pay in any meaningful terms. Food-generating land wins, and rent looted. Yet vulnerabilities exist: illiquidity, land cannot be quickly sold. Political upheaval can make ownership unsafe. Confiscation risk. Zimbabwe, 2000, Mugabe's land seizure program revoked property rights by decree. Farms were redistributed, sophisticated operations destroyed. Agricultural output fell 60%, and aggregate land value fell 75% in 1 year. Taxation: governments can tax land into oblivion. Domestic versus export crops. Land-producing export crops is superior because it earns stable foreign currency. Domestic crops earn collapse. The strategy: own land productive enough to generate food or export revenue, preferably outside unstable jurisdictions or held through protective corporate structures. Land retains fundamental value through production, but is less liquid and more exposed than precious metals or portable equities. What goes to zero? Understanding what fails is as critical as knowing what survives. 1. Fixed income securities, bonds, treasury notes, any claim against a failing state. Weimar Germany bondholders lost everything. Marks used to pay interest evaporated. Argentina, 2001, nominal value cut by 70% in debt restructuring. Collection required years of legal battles. 2. Savings accounts in domestic currency. Lebanon, pound-denominated deposits lost over 95% of value between 2019 and 2024. Nominal numbers stayed the same. Real value vanished. Being a creditor to a collapsing state is the fastest route to total wealth destruction. Contemporary warning signs. Recognizing patterns matters before collapse strikes. Iraq, lack of liquidity, over 70% of the money supply inaccessible due to banking restrictions. The dinar devalues from 190 per dollar, unofficial rates of 1,750. Public distrust surges. Currency smuggling begins. This is stage 3. Turkey, gold deposits double as citizens flee fiat. Runaway inflation signals. Stage 4. Currency substitution begins. Lebanon, 98% currency collapse executed. Banking system insolvent. Stage 5, complete failure. And the elephant in the room, United States. Debt, $38 trillion. Debt to GDP rising unsustainably. Interest payments now dollars share of global reserves, 80% in the mid-70s, 65% now. The pattern echoes the decline of Britain's sterling in the early 20th century in 1913. Britain was the world's largest creditor. Within 40 years, the dollar replaced the sterling. History warns us, no currency is immortal. The lesson of diversification. The first principle is simple yet ignored. Do not place all your fate in the hands of a single currency, a single nation, or a single asset. True survival is diversification, not panic. Owning only domestic equities is a path to ruin if your country's currency collapses. Holding only bonds denominated in the failing currency guarantees annihilation. The Machiavellian truth: wealth must be armored across multiple forms of value, each responding differently to the disintegration of monetary authority. A resilient portfolio contains precious metals as a shield against currency erosion, foreign hard currencies to escape national collapse, productive equities with international revenue streams to benefit when local money fails, real assets in stable jurisdictions for tangible security, tactical consumables to trade when systems freeze. History is not idle speculation, it is a ledger of human folly. Watch carefully. Iraq, Turkey, Lebanon all show clear signs of monetary stress. The US dollar remains dominant, but historical precedent warns that even reserve currencies decline. The Machiavellian question is not if, but when. Prudent ruler does not panic. The prudent ruler prepares, positioning wealth such that no single collapse destroys purchasing power entirely. Diversification across asset classes and across borders is the ultimate safeguard. The 5 assets that survive. Let us review the eternal survivors, the assets that endure when governments fail, currencies crumble, and empires fall. 1. Precious metals, gold and silver, are immutable. Central banks cannot print them. Governments cannot debase them. They are the ultimate insurance. 2. Foreign hard currencies, the escape valve. When your local currency dies, holding stable money outside the failing system preserves purchasing power. 3. Productive equities with international revenue. Companies with export streams are beneficiaries of collapse, not victims. Domestic-only businesses perish with the currency. 4. Consumables and barter goods, tactical assets. Cigarettes, batteries, water and food are temporary currency substitutes during systemic breakdown. They are for immediate survival, not long-term wealth. 5. Agricultural land, the immovable source of calories. Land that produces food, preferably for export, sustains life even when the currency is meaningless. Vulnerabilities exist, illiquidity, confiscation, taxation, but it remains fundamentally valuable. The asset that equally important is knowing what will vanish completely. 1. Fixed income securities denominated in collapsing currency, bonds, notes, and any claim against a failing state. Total loss is the norm. 2. Savings accounts in domestic currency. When the system fails, nominal numbers mean nothing. Your bank account can vanish, leaving only the memory of value. The Machiavellian truth. Currency collapse is not random, it is predictable. Stage 1 through stage 5 repeats across nations and decades. Overspending, overprinting, loss of purchasing power, flight to alternatives, and final ruin. The average fiat currency lasts 27 years. 99% of all currencies that have ever existed are now gone. To ignore this is to invite catastrophe. The only question is whether you will see the pattern before you are standing in line at the bakery. Watching bread costs 200 billion marks. The ultimate strategy: do not hoard wealth blindly, do not clutch gold in secret bunkers. The Machiavellian approach is calculated, diversified, and preemptive. Protect a portion of wealth in precious metals. Maintain foreign currency reserves outside unstable systems. Invest in productive companies with export or international income. Keep small tactical reserves of consumables for immediate utility. Own agricultural or real assets in secure jurisdictions. By doing this, no single failure can destroy your ability to maintain power, financial, personal, or political. This is the art of surviving history's inevitable upheavals. Final Machiavellian warning: power lies in foresight, wealth lies in preparation. History offers its autopsies freely. All you must do is study them. The pattern is mathematical, predictable, and merciless. Position yourself, diversify, and ensure that when the collapse comes, as it always does, you will not be a victim. You will be a master of circumstance. Remember, the weak watch empires burn, the prepared inherit them.